Welcome back to the channel, everybody. Appreciate you stopping by for today's video. If you don't mind, do me a favor, like the video, subscribe to the channel, and leave a comment down below on what you think about what I'm presenting today. Do you think it might help you? Do you not care? Do you think it's a bunch of BS? Do you just want to make fun of a bald guy? Whatever you want. Every little comment, of course, and every little like um, will push us out further to those who might find my information helpful in their trading. And that's all I'm here for. I've been blessed with a skill that makes me money, and I would just like to pass it on to other people. I don't charge for anything. I have two students right now that are learning from me. I don't charge for anything on my Discord. I don't have a paid YouTube. I don't, I'm not selling a course, nothing. Everything I give out is for free um, because, like I said, I've been blessed with this skill, and I would just like to be able to pass that on to others to help better their lives as well. So today's video is about using uh, the one tool that will make you a better trader on the lower time frames to get the best entries with the tightest stop losses so that you can make those profits a little bit easier and a little bit quicker on the charts. So the dealing range is what we discussed in the last video, and there's a tag up here if you'd like to go watch it first, if you happen to stumble upon this one first. Um, that one is very important because it basically explains everything I'm going to do today. So we use the dealing range on the 4 hour and the 15 minute to find our bias, long or short, and that can change in the middle of a day. It might not change for a couple of days. It all just depends on the price action based on the dealing range. But once I have that bias on my 15-minute, my 4 hour and my 15-minute chart, I now need to go down to my entry level time frame, which is either a 2 minute or a 3 minute. And the reason I'll show you in a second as to why I might switch those two. But I need to go down to that time frame and find an entry. And we can use the same tool on that lower time frame chart to find our entries. So let's just jump right into it and get to the charts. Um, Here I have pulled up my 15-minute chart, and I do not have a dealing range on here as of yet, but well, let me just go ahead and throw it up. The one we were using was the 4 hour, okay? And this was our last dealing range, okay? So I have a couple of these Fibonacci retracement tools set up with different levels and different names so I know where they are, right? So we're going to go into quads and we're going to put in our 4 hour dealing range that we had previously. Okay. I didn't watch my other video as to why there are two lines here that are not at 25% levels if you don't already know what they are. Um, so we'll lock that in. This is our current dealing range. On Friday, we came down and swept the low of the dealing range, and then we pushed up 600 points. Okay. Um, so that started way up here, November 7th at, okay, uh, 9:30 in the morning up in this area. Okay. So in the London session, okay, that's the 4 hour. We use the 15-minute. So we'll go down to the 15-minute time frame on the 7th and take a look at what had been happening. So, 6th, 7th, there we go. All right, just a quick look, guys. Okay. Got a Walmart order coming, so we got to get this done before they are on their way. So at 6 o'clock in the morning, which for me is the New York Open, that's what I consider the New York Open on my charts, and I am an ICT trader, so um, I only use two concepts in ICT, which is fair value gaps and the dealing range. Most people don't know about the dealing range, and it's not used a whole lot. And I have no idea why, because the dealing range is what changed ICT trading for me forever to actually become profitable and find the right fair value gaps to be trading at. So the morning of Friday morning at 6 o'clock at the New York Open, we made this 15-minute fair value gap. We came back up to it before the Open and tested it, and the midline held. And we pushed down and we made a new lower lower low. Okay. Up until that point, we had been making lower highs and lower lows the entire time. Okay. Um, so when the open came, we pushed up at the on the 10-15 candle back into that midline, and we just barely swiped, excuse me, this high. Okay. And that candle closed as a down candle and gave us a bearish engulfing candle. Now, for me, an engulfing candle doesn't have to close below the wick. It just needs to close below the body because the body is where the majority of the volume of the candle is. Okay. So if we close below that body, that is now a bearish engulfing candle for me, and I will start looking for shorts. And that was at 10:15. Okay. So let's take a look at our entry chart at 10:15, okay? And around 10:15, we were at right around the 50 ATR. So I'm okay trading this on the 3 minute, okay? Because and around that time, we've pretty much hit the max volume of the day, and ATR is going to start falling off a little bit, okay? So at 10:15, I know, or I should say 10:30, I know I want to be going short. Okay. And 10:30 is right around this area right here where we come up and we make a lower high from sweeping this high and pushing back into the fair value gap. Okay. So price starts falling. Um, Now, what I'm looking for is swing highs and swing lows. And I will be marking those out as they come along. Okay. So after we push up and reverse and we have our bearish engulfing candle, okay, then the next 15-minute candle starts pushing up and makes a lower swing high. I make note of that and I mark out the swing high. Then we come down and we hit here, and then we have this candle close here, which gives us a swing low. Okay. Immediately, because I don't know what's going to happen, and these are 3 minute candles, so you got a couple of minutes. I come down and I grab my mini quads. Okay. And I will go from this swing low to this swing high, and I will put some zones on my chart. Okay. I also have this fair value gap right here, the 3 minute fair value gap there, and I have a 3 minute fair value gap here. Okay. And I would be marking my 3 minute fair value gaps out as price moves along. I also know that I have the bullish fair value gap right here. Okay. All right. So if we've now broken back, excuse me, we've broken back below uh, the 9 EMA. We have a sharp hook in the 9 up here. We've also inverted this fair value gap. Okay, so now we have an inverted fair value gap. Okay, and now we have our mini quads on between our swing high and swing low. Okay, so now we've confirmed on the 3 minute that we've made a lower high and now a lower low. Okay, all right. So when this candle pushes up, actually, as soon as this candle pushes up, I'm going to go ahead and mark this out as a swing high. If it gets broken and it doesn't make a swing high there, then that's okay. I'll take it off or I'll move it to where the swing low, sorry, is actually made. But right now we're there. We push up and we tap the inverted fair value gap at the 9 EMA. Okay, we break through the 75, but we can't get to the 50. Okay, the next 3 minute candle comes off, gives us a color change, a bearish engulfing candle off the 9 EMA, off the inverted fair value gap, and closes back below the 75%. Now, if we were going to go to 50, or even between 50 and 75 to get to the middle of that inverted gap, then I would not expect to close back below the 75% level. Okay, not to say that it couldn't close down and then go back up, but this gives me a higher probability. We're just coming off a 15-minute fair value gap that is now held for the second time. We've changed structure on the 3 minute chart. We have a character change until we break this low. We don't have an actual break of structure, but I would certainly consider that a break of structure. Absolutely consider this a break of structure. Okay. Um, but the very first one, I'm not going to consider break of structure. For me, that's a change of character. Okay. But with all of this confluence, inverted fair value gap being touched at the 9 EMA, coming off the 15-minute midline that is held nicely twice, I'm willing to enter that trade as soon as we break and close back below the 75% DRT level. Okay. I I would my A++ setup is push with the pullback happens. So we make the swing high and the swing low. The pullback, I would like to have seen it come into a fair value gap and not close above the midline, either this gap or that gap. Either one wouldn't have bothered me. The fact that we have this big bearish or bullish fair value gap that got inverted on the way down to make the swing low gives me a little bit more leeway to enter on just the touch of the inverted gap and then a color change. Okay, white candle to blue candle that closes back below the quarter. Okay, so I'm willing to take that trade right there, and I have a 50-point stop loss, and I'm looking for 100 points in profit. Okay, so the very next candle pushes us up into a little bit of drawdown and then starts falling. Another push up and fall into profit. Okay, so we were in this for 5 bars. We were in this trade for 15 minutes and we made our $250 and we're done for the day. Okay, that was the very first opportunity for me to take a trade on Friday morning. Okay, but let me just put in here. Okay, I'm going to take that off. And we made a swing high here on this pullback, and then we made a swing low right here. Okay, so what I'm going to do again is take my tools and I'm going to do that. Okay, now I would more than likely be taking this trade right here on this push down that closed back below the 25%. We reached swing high, swing low, pull back to the 9 into a fair value gap above the 25% that then closes below the 25%. Yes, it's an up candle. I don't care. Okay. I'm going to take that trade at the close of that candle. Whoops, wrong one. I'm going to take the short at the close of that candle. Okay. And I have a 50-point stop loss, which, and a 100-point target. Okay. Which we hit again. Okay. Now that's 200 points on the day. That's a $500 day because on the higher time frame, I knew we were coming down to sweep a 4-hour low. That was the draw on liquidity, was the 4-hour low at the bottom of the 4-hour dealing range. Where you at? Right there. Okay. That's where the dealing range started, all the way up to the all-time highs. We came all the way back down, and now we've broken this area here. Okay. And we're coming down past the 7-0 again to take out this low, to take out this low. And my draw on liquidity was, hey, I think we're going to go down and take out the dealing range low and swipe it for liquidity. Now, I ended up actually taking this trade. I did not get into this one, okay? Because once we were down here, I knew we were actually headed for uh, the low, okay? And if you want to know how I knew that, go check out that other video, all right? Um, so once we swipe that low, we get a huge push up that sweeps the high. Okay. So now all I do, because I know we've swept that low and we got a heck of a reaction off of it. I mean, that's 3 fair value gaps in a row, 4 fair value gaps in a row. Okay. Just boom, 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 right off of that level. And we close above this swing high. Okay. So now all I do is start measuring to the upside. Swing low to swing high. We break the 50%. We come into this fair value gap, and of course I would have all 4 of them marked by now. We come into this fair value gap, the midline holds, we break back above the 9, and we have a color change. Down candle, doesn't break, it doesn't, well, it did actually probably break and may have actually put me in the trade there anyway. Okay, but if not, it definitely got me in on the next candle. If I had traded this, I did not trade this particular trade, but this is a setup and this is how I use it on the lower time frame. So I'm going to show you all of Friday's price action. Now, I personally waited a little bit before taking this trade. Okay, on the up move, we had 600 points. Do I need to catch all 600 points? No. I literally only need to catch one of these trades a day because I've got five I've got 2 funded accounts in Top Step, not Top Step, jeez, in Top One Futures, and I've got 3 50K evals going. Okay, I'm only looking for $250 a day. If I do that over all 5 accounts, that's $1,250 a day. Okay, so I only need $250 per trade, catch one trade during the day, and I'm done for the day. I'm risking 125, so I can lose 2 trades in a day. But if I lose 2 trades in a row, I'm done. I'm not going to lose any more than what I'm expecting to win on a winning day. Okay? Risk management. Think about it. It's pretty important. Um, so again, on this color change, I'm willing to take that trade. Okay? So I'm entering right here with my 50-point stop, and that doesn't quite cover the low, but I'm okay with that. Okay, doesn't quite cover the bottom of this candle, but it doesn't matter to me because this candle's already pushed down. It is now on its way up. and we get zero drawdown looking for 100 points, and we end up getting our 100 points at the 106 candle. Okay, so we've made a higher swing low, and we end up making a higher swing high. Okay, so again, take my mini quads. Boom. As soon as we make the swing high, as soon as we break this, I'm tracking candles, right? And there's our new swing high right there. What do? We hit the 25% mark into a fair value gap. Is this sounding familiar, everybody? Is this sounding familiar yet? Okay. Midline holds, pull back to the 9, into a fair value gap, color change, bullish engulfing candle, take it at the color change. Okay. With your 50-point stop loss and your 100-point target. And, oh shit. Oh well, we already know we have an entry there. I'll just get rid of that. Make it a little bit easier. Starting to get a little combobulated in here. Okay. Pushes up, doesn't quite make target, comes back down, gets you into drawdown. Hey, guess what? Don't move your stop loss. Don't go to break even. I mean, you can. You're going to have some break even trades because some of these are going to need to pull back because they're reaching certain levels and they're going to need to pull back more than you expect. But am I confident in the trade? Absolutely. Okay. So we actually make a new swing high here and start pulling back. Okay. And that, you know, that might worry me a little bit. Yes. But am I going to get out of the trade because of it? Hell no. Okay. Not going to happen. All right. So we have a swing low. We made the swing high here. So, hey, guess what? You know, if you didn't feel like getting in the last trade, you can get in this one. Because what do we have? Order block. We pull back into the order block to the 9, take it at the color change of the last down candle. Or wait till you take it and create another order block. Okay? Whatever you want to do. But if you're entering this up here, this is probably going to take you out. Okay? This is why I use fair value gaps. Okay, so you got a fair value gap and an order block all together sitting right here. This is why I do not move my stop, okay, on the lower time frames. Don't let the lower time frames shake you out. Because as you can see, there are plenty of winning trades, okay, if you do get stopped out on one. All right, so then we pull down, we come and make a swing low, and then we go up and we make a swing high. Okay, so let's just move this one to the new swing high. It broke these highs, made a swing high. We now have a new swing low. Okay, what do we have here? No fair value gap. Nothing there to show me any interest other than, okay, the pullback below the 9 that closes above the 9 and then has a color change off the 9. Meh, this isn't a great trade. I wouldn't take it. Okay. And then we get to the really strong part where we have a swing low made, a new swing low, and we just absolutely blast through all these gaps. And this is the original. No, that's not the original. Then we just blast. Okay. What do you do with that? Right? How the hell are you supposed to trade that? Everybody and their brother saying, there's no way in hell I'm going to try to catch this move. It's too far gone. I can't get any more out of that. Okay. And this is pretty late in the afternoon. But look what happens from the swing high, pull back to the 50%. Can't hold it. Close back above 50% and invert this fair value gap. You damn skippy, I'm taking that trade. Okay. Inverted fair value gap off of the 50% pullback with my risk. Okay. Pulls back a little here to get us into a little bit of drawdown and then just blast off. Okay. Another winning trade. And you're at the end of the day. Okay. This trade I wouldn't have really bothered with because we had this in front of us. But once we fair value gap through all of that, yes, we are still in a very strong market. And I'm willing to take that trade right here on the pullback. Okay. So once I know the trend, I'm looking at the pullbacks that make, we make a swing low, we take off, make a new swing high, okay, that breaks previous swing highs. Then I'm going to measure that out and I'm going to look at my quadrants. First thing I'm looking for is the fair value gaps at these quadrants, okay, at the 25, the 50, and the 75. Looking at those fair value gaps, making sure they're marked out. When the pullback comes, where do we go to? Okay, do we break the 25? Uh, if we do break the 25, watch the fair value gap at the 50. If we break through that one, look at the fair value gap around the 75. If you get a reversal off of one of these three levels on a pullback, I don't particularly love the 75, but I would have taken it here because this inverted fair value gap and these bullish fair value gaps that just became inverted fair value gaps should definitely hold as support into this bullish fair value gap. Okay. So I would have definitely taken that trade. Depends on what's in the area as far as fair value gaps, inverted fair value gaps, and the 9 SMA. Okay. On whether or not I want to take a trade in those areas. All right. This one would have been one of the ones if it had pulled back to the 75 and gave me a bullish engulfing candle or an inverted fair value gap down there back to the upside, then I would have definitely taken that trade looking for my 100 points. Okay. So you can see how I use this on the small time frames to get really good entries that typically are big enough for my mandatory stop loss, which is 50 points and $125, looking for a $250 win. We had one, two, three, four, five opportunities, six iffy. I don't like that one. I'm not going to count it for my trading, okay? But there were five opportunities for me to make my $250 on the day using this system, okay? It works, it works, it works. All right, that's all I can say. And I only need one of them. I did catch mine, and I was done for the day. All right, so if you like what you saw, do me a favor. I'm going to ask again. Click the like button, subscribe to the channel for further content, and leave me a comment. Let me know what you think about it. All right. Now, again, this is on the lower time frame. If you want to know how to figure out your bias so that you can know what the lower time frame is going to do and start looking for the trades like this on your lower time frame, there is going to be a video right up here somewhere where I explain the 4-hour dealing range, how to find it, how to set it, what to look for in it, and then switch over to your 15-minute chart to find your directional bias to then go down with what I've shown you here on your entry time frame and use those quadrant levels to find your entries on the charts and make lots of money.
Here comes the money. Money, money, dollar, dollar.
All right, everybody. I certainly enjoyed sharing this with you. I hope it helps your trading. If you have any questions, please feel free to throw a question in the comment. I do return all comments in my YouTube videos, and it may take me, a little bit, but I will get back to them, I promise. Um, Tonight is Sunday. Tomorrow, Top One Futures has put it out. The Ignite straight to funded accounts that are $179 for a 50K account are going to be taken off the menu Monday at midnight. Okay, so you've got all day tomorrow, the rest of tonight, and all day tomorrow till midnight tomorrow to pick up one of these $179 funded accounts. I have two of them. I'm trading them now. There are a little tighter rules, but for the money, you can't expect them to have the same rules as a regular straight to funded. 15% consistency. That's why I only shoot for $250 a day. $1,000 max payout on your first payout. That's okay by me. I can live with that. Okay. So, and for me, it makes trading easy. I mean, getting $250 out of the market is not that hard. Okay. All you got to do is have your setup, which I have. It has to have an edge in the market, which it does. And you have to be patient, wait for the right setups, which I mean, if you're going to have 5 of them a day, setups to trade, you can be patient and wait for one of them. Okay. All right. Well, that's it for this video, everybody. Again, check out the video on the 4-hour dealing range theory, and I will see you again soon. I stream live every morning, uh, trading the Dow in my prop firms at 9 o'clock in the morning on YouTube. Also in a Discord channel that I'm in. And I'll leave a link to that Discord channel as well because the YouTube has uh, a delay on it. If you'd like to see uh, my trading live with no delays, then you'll have to come and jump in the YouTube, holler at me. My name is Slothfather in the Discord, and uh, or Richard, aka Slothfather, I do believe. Um, Yell at me and let me know that you're coming over from the YouTube channel, and I'll get you all situated over in the Discord as well. So until then, enjoy Sunday evening. Get ready for tomorrow. Let's have a fun week of trading and let's go make some money. Until then, stay blessed.